Good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary on Wednesday morning. It's July the 2nd. We hope your day is off to a good start and looking forward to today's trade and activity. Look at first the overnight markets here. We have U.S. dollar index a little bit firmer this morning, natural gas a little bit firmer, crude oil a little bit firmer again, so very quiet moves in here. Stock market has been higher until the ADP employment change numbers came out. Those were down. They were down 33,000, well below expectations of an increase of 95,000. It's down from last month's 29,000. And we saw job losses in business, professional services, health services, education, and that's the first decline since March of 23. So stock market did not like that, pulling off of its highs, trading lower. Corn down 3 cents in December contract, but November beans up 6.5. Look at bean oil. That's probably the biggest mover of almost anything overnight, over 1% higher, 1.5% better bean oil trade. It kind of matches the crude oil and natural gas strength. But there's also ideas that we're going to see increased demand for soybean oil and vegetable oils in general, giving us some support there. Wheat is 2 to 3 cents weaker. Overnight, good growing conditions, harvest activity. Weighing on the wheat market now, looking ahead here, there's a big carry in the market, and producers should really be taking advantage of that and selling that deferred carry. A lot of the crop is probably going to be put into storage and not sold right now, which will take a little bit of pressure away from the front months, as we just don't have that harvest selling or that harvest pressure weighing on values. Although it doesn't mean that that's very bullish. It just means that the crop is being held off the market for the current time frame. And the job of the market is to find a price level that's going to stimulate demand, stimulate that farmer selling at some point in time, whether it's due to high prices or prices just kind of getting low enough that they throw in the towel and move on to the next marketing season. So that's how the overnights are looking. Follow us on Twitter, Midwest Markets. I'm Brian Hoops, and visit our website for more market information and where you can sign up for our newsletters and text service and everything there. All right, weather maps continue to call for nearly ideal growing conditions across the Corn Belt in the 6, 10-day and the 8 to 14-day time frames. Normal, above normal temps with precip also in that above normal category through the second week of July. Now, some of the longer range forecasts, and you look at your forecast, they can't even get this weekend's forecast right, but longer term forecasts are showing hints of drier conditions into the end of July. This would certainly be detrimental to soybeans and soybean yields. It could also hurt corn yields, and we're seeing strength in soybeans overnight. Now, if the market finds confidence in these forecasts, I think you will see a recovery off of these low prices. We had more deliveries overnight: 78 corn, 927 meal, 424 bean oil. Chicago wheat only 1, Kansas City 129, no corn. Minneapolis wheat or oats delivered once again. Yesterday afternoon, census crush report. Very bullish report here for crush. 203.7 million bushels. That's a new record, easily setting a new record for the month. A year ago, we were 191.6 million, and it was also slightly higher than the April number and above market or slightly below market expectations. This week's cattle facts show list, it's up 3,500 head for a total of 231,000 head. Cash trade called softer this week, as we have a holiday shortened kill week on Friday, and packers do not really need to bid up for their inventory. In fact, there was some cash cattle trade yesterday. 650 head is all at 220 to 224. Probably average is around that 221.5 area. August futures still heavily discount after the drop yesterday when they're 210.75. I do think once we get back from the 4th of July holiday next week, we will see some rebound in the cash markets. I think we will see some strength there after this week. So packer margins are in the black, and they'll be buying for full kills next week. That should give us some stronger cash trade in a week, but that's a week away. All right, I'm going to sign off here, and want to mention I'll be doing RFD TV this morning as well as Thursday morning. No trade, of course, on Friday. Markets will be closed on Friday because of 4th of July holiday. So hope you have a chance to tune in to that appearance. If not, we'll send out the link later. Have a great day, everyone. Good luck and good trading.